$12,000 a unit. Unheard
Insane.
of,
Yes. Yeah.
right?
And most people have like the credit limit, $12,000 on a credit card, and then people buy houses for 200, and that they think that's still good deal, and buying a multifamily, property, and that's insane.
Yeah, it really was. So I bought it in 2018, and this deal actually came with seller financing in addition to that
Nice. That's
awesome
a
price that we
lot
got.
of cherries on the top.
Exactly, it was unreal. So it came with seller financing of $250,000. So we actually only had to put in $30,000 down to take over this building,
Wow.
and it was such an awesome deal for us. And what we ended up doing was that we renovated the building.
Hmm.
So we had to put in a bit more money into it. And then we fixed it up and we filled it, and now it's rented. So the
Nice.
property value has gone up significantly because of that.
That's great. And then other thing, with the commercial real estate is that it's based on the income,
Yep.
and you focused on increasing the property value by focusing on the strategy renovation so that it's rented out, and higher rent, higher income and higher value.
Yeah, absolutely. Yeah. Driving the NOI, net operating income, higher through increasing rents, reducing operating expenses is huge. Even though the cap rate in this smaller market is the cap rate is relatively high, you can still get a pretty decent property value on it. Actually, in this case, I'm actually selling the property right now.
Oh,
Uh,
congratulations.
yeah. So if anybody wants to purchase this property, I'm selling it for 1.44 million, which is $60,000 a unit.
That's a
And that's
great price.
yeah, and that's actually quite a bit lower than what market is. Market is probably closer to 75,000 a door.
Mhm.
So somebody who's buying it is getting a pretty decent deal
And then
on it.
everything has been done, roof, and it's been all, that's amazing.
Updated, yeah. So like they basically take over a turnkey property, which is generating good cash flow on it,
Nice.
type of thing. Yeah. So I mean, I learned so many lessons going through that whole process of buying it, fixing it up, finding all my investors, finding contractors. So that's my focus is secondary markets.
Mm, nice.
So
That's great. And then, so a lot of people are hesitant to go into, the smaller markets. And what would you suggest somebody what they should do, when they're looking for any property in the secondary markets?
yeah, when looking at the secondary markets, I mean, definitely look at the economics of the
Mhm.
location. What's driving people to, like, is there work? What's driving the economy in the towns? Are people moving into the location, type of thing? Um, like when I looked at my Swan Hills building, that location actually had indicated like a 40 to 50% vacancy rate. But my
Wow.
building is not 40 or 50% vacant.
So it's like the numbers could be different what actually exists, right?
Yeah,
Yeah.
absolutely. Right. Okay. Like I actually only need 24 people to fill my
To fill the
building. I don't
building.
need the whole
Yes.
town. I don't need everybody. Right.
Yes. Yeah.
All I need is 24 people to keep it occupied.
Right, yes. And
So
then based upon, like, talk to the mortgage brokers, right? Talk to the credit unions, I think has been a great, when we're looking for, like, the
yeah,
towns.
absolutely. What one? Okay, so like one of the bigger challenges with smaller markets is getting financing for your properties, because there's only a limited number of lenders that might work in these smaller areas. So you'll possibly have challenges in finding the right lender. Maybe you're going to pay a little bit higher rate on it. But I think like when you find the right property in the right location in these secondary markets, they can definitely work.
Yes.
Yeah. For instance, we bought a 42 unit property in Vermilion about a year and a half ago. And in that location, we were anticipating cash flows of $5,800 a month. And we're actually getting substantially more than what we underwrote.
Yes, because you when we underwriting, we make sure that there's a contingency and there's a high vacancy what is projected, and we are underwriting like being in the worst case scenario, right? That doesn't
Absolutely.
always happen. Yeah.
Yeah. So we got interest rate. We locked into an interest rate that was lower than what we underwrote. Our repairs and maintenance costs are lower. So that all adds to our cash flow to this. And then, we were able to increase the rents on, on this property. So that all adds to the cash flow. And that's actually very tremendous, just finding the right property in the right location and paying the right price.
Absolutely. And then Vermilion is on the way, in between. It's not like far from the highway. It's on the intersection. I cross Vermilion all the time when I'm,
Yeah. Actually, Vermilion is right along Highway 16. It's pretty close to Lloydminster, not too far away from Vegreville. So I mean, I don't know exactly how many people are in Vermilion, but I think it's maybe about 3,000, 3,500 people. There's agriculture, there's oil and gas, there's a college there. So,
and then I still remember my CRA office was something when I was a student, like in Vermilion. So that was, I looked up, where is this town?
yeah, exactly, right? So, I
Yes.
mean, there's all sorts of things going on,
Yes.
and
Look deeper. Yeah.
yeah, look deeper. I think really know what your goals are. Like if you're looking to, look for cash flow and things like that, these secondary markets are really good for that. Like when you compare the cash flow from a property in these secondary markets to, let's say, Edmonton, okay, the cash flow in Edmonton is not going to be that strong. There's lots of competition. The prices are quite a bit higher in Edmonton. So that's why I kind of prefer investing in the secondary markets.
Right, like less competition. So if they're in a town, there is no other building available, or everything is all occupied. So people are going to, find jobs,
Absolutely.
and then they are going to rent out. Because I think in real estate is a business, end of the day, and we always think about the building, but we also need to consider who are our clients, our tenants, and where they will be living, and what kind of jobs they will be doing, right? Because
Absolutely.
jobs are there, and how much they will be income, and how much can they afford to pay the rent and the bills, right?
Absolutely. Yeah. Like looking at your tenant profile, like what the economy is, what people typically get paid with. Like we just bought another building in Whitecourt. And in Whitecourt, there's 10,000 people. There's a Walmart, there's Starbucks, there's
Wow.
all sorts of brand name companies there. Forestry is a huge employer there. So in that particular building, I mean, we're getting really good cash flows there, and yeah, we're really happy with that one.
Nice. And at the end of the day, I believe that Costco, Walmart, and Starbucks, they have done their own due diligence. They spend millions of dollars doing the market analysis, which market they are going to, start their own location. So having a Starbucks, like they're big franchise. So if
Yeah.
they have invested, we can leverage that, their experience, their research, and we can invest there, right? So.
Absolutely. Like that's one of the things that we looked at when we were looking at Whitecourt was, yeah, we're really happy that Walmart is there, like Starbucks is there, some really good brand names, Boston Pizza and other names like that. So when those companies are there, it makes it much more. Uh, it feels a lot better when you're investing in those kind of towns.
That's great. And what are you working on now, Gary?
Yeah, right now I'm involved in a 40 unit development in Edmonton, and then we're also looking at a 95 unit mixed use building.
Nice.
It's sort of in the preliminary stages for that one. And then also I have some properties in Saskatchewan, and right now we're looking at a 45 unit building in Saskatoon.
Nice,
So
Saskatoon.
yeah,
I lived in Saskatoon for 7 years. It's a great market. It's a stable market. A lot of people going in, because of affordability, and the city is very, very, investor friendly. Like when you actually talk to the city planners, and a lot of opportunities. You
yeah,
can you can you can make good, cash flow, and lot of opportunities for even like small investors. They want to get into single family housing construction, and a lot of opportunities in Saskatoon too. So your mixed use, is it in Edmonton too?
it is. It's in Edmonton. It's in an area that's maybe a little bit tougher in terms of tenant profile and stuff like that. I've talked to our property manager. They would look after it. They've already got some buildings in the area, so it really takes a team of people to make a deal work. Like you got to have the right property manager. You got to have the right mortgage broker. Like for actually on one deal we had. I had a buyer that went to a mortgage broker, and they were looking to get 95% loan to value using the MLI Select program.
Right.
They were not able to get 95%, so they ended up collapsing the deal. I ended up buying that deal, went to my mortgage broker, and they said, yep, we could get 95% loan to value on it. And we were able to close it with the 95% loan to value
Nice.
because we did certain things our mortgage broker suggested we do, and we were able to close it that way.
Right.
I mean,
And it's a
yeah,
huge, like, I believe that investors, as investors, we look at the property, but we also focus a lot on our education and a lot on our building a team, because right contractor, right mortgage broker, and the right even strategy, like when you're buying a building, looking at the exit strategy. And it's all about the team, and appraisal, right? Like
absolutely,
environmental, and
absolutely.
making sure that you're de-risking every single project, and you have strong team, and doesn't matter what happens in the market cycle, that building is supporting itself is crucial.
Absolutely. Yeah. I mean, getting the right team members, like in our case, we actually had to go to a second appraiser in that the first appraiser wasn't aligned with what we were looking for. And then we also had to go to a second building inspector in that we were having some challenges with that first inspection.
Yes.
So yeah, I mean, yeah, like it really makes a difference on having the right team
Right.
to help things work.
And being a strong working partner, having 35 years of experience, right? So based upon your previous deals and the projects, that what it should be appraised at and why this is not happening, right? Like bringing somebody second, taking somebody's second opinion, and bringing somebody different, like the mortgage broker, and that can, like that can make or break the deal, right?
Absolutely. Yeah, yeah. Like having the right mortgage broker, appraiser, ESA person, building inspector, they're all part of your team. Even having the right lawyer, setting up your corporate documents, how you want to arrange
Funds, yeah.
your corporate structure. It could be GPLP, it could be just a single share, or it could be shareholders. There's so many different ways to arrange a deal. and you got to make sure your numbers work too, right? So you underwrite it, and underwrite it, so many different times and so many different scenarios to make sure everything's going to work.
Yes, it doesn't matter what happens. You're having a multiple. If BRRRR doesn't happen, what else can you do it, right? Like
Exactly.
if this exit doesn't work, if can you do plan B? Can you do plan C? If one project does not sustain itself, like the money has to come from somewhere, right? It
Yeah.
doesn't matter if it's a commercial building or any type of business. And if multiple exits help, one doesn't work, you go to the second doesn't work, and third doesn't work. And also the intellectual currency, right? Being in real estate for a long time and going through so many projects brings that you can't put a price on intellectual currency, right?
Yeah, experience, having gone through it at least once, twice, three times, that is so valuable type of thing when you can bring that to the table.
Yes.
Like when we're doing deals, it becomes a lot smoother. You know what to expect, and I guess when you're dealing with CMHC, they always throw curveballs because they're changing the rules all the time.
They
But
are the government. They can.
yeah, but you have a team behind you, and you adjust as you need to,
Yeah.
right? So yeah, it's really important that way.
Right. And Gary, I remember meeting you in Vancouver.
Yeah.
We were at the education event, and you brought you met your son, and it's amazing that you have twins. I remember, right?
Yes, that's right. Yes.
Yes,
Yeah.
yes, yeah. It's and then so you were born here in Canada.
Yeah, that's right. I was born here, raised in Edmonton pretty much all my life. So.
Nice, nice. So what got you into real estate? And you've been doing 35 years, and it's been like the whole life, right? Yeah.
Well, I mean, yeah, I mean, buying real estate was always something that we like to do. I guess my parents bought real estate as well, bought their own house and looked after it. And then we also wanted to have our own home, where we could own our own property. But it wasn't really until 2010 that we got heavily into income real estate, where a friend suggested I read Rich Dad Poor Dad, and that was, after reading that, it really changed our direction of how we were going to produce income and where we were headed. So actually in 2010 we bought our first small unit condo in Vernon, BC. And
Nice.
from there, we kind of grew into suited houses, into fourplexes. And then, in 2018, we bought that 24 unit in Swan Hills. So yeah. And from there, we've just continued to grow and grow.
Nice, that's great. Rich Dad Poor Dad changed so many people's lives because he compares about how one person in having a one source of income, and another side, one other person, other dad focus on the businesses and increasing the property values.
Yeah, absolutely. Like having one income can be quite stressful, actually. When you have multiple sources, like getting cash flow from multiple buildings, now you're not relying on just one income. You're
Mhm.
getting income from this building, that building, that building, and it all adds up, and it gives you much more stability,
Yes.
actually. And like if you're have one income from an employer and he lays you off, well, you've got no more
Still,
income.
yeah, you still have to pay the bills, and your
Absolutely.
kids still have to eat, and you also have to eat, right? So,
Yeah.
and having so these multiple buildings are, every building is a business,
Yeah,
and
exactly.
income comes in and expenses go out, and the rest is your, cash flow. You increase the value of the property, you refinance, it's a profit, and you keep doing. You're making like mini me.
Exactly. Like
Yes,
like
like
you're just expanding from one property, like when you refi a property and can take that money out and reinvest it in another property, that's fantastic. Now you're really growing your portfolio that way.
Right. And I think, your focus has been commercial real estate, focus on like Alberta market. That is also
Yeah,
huge, right? So you have built your team. You know the strategies. You have the connections, and you know the different markets and markets going up and down. And I think that's also makes a big difference for real estate success, because
absolutely.
moving from one market to another market and starting your team again, and takes a long time too, right?
It does. It does. Like, like if you have to build a team in lots of different locations, it definitely takes a lot of time and effort because you're building a relationship. You're building a relationship on how you work with them. Sometimes you can work really well with one person and not so well with another one. And so you just have to find that right balance of getting the right people together and working that through. Now, fortunately, we've been able to stay primarily in Alberta and use the same team. And when we purchase in Saskatoon, we can use some of the same team members, and we're probably going to have to expand and get new team members as well, since
Right.
it's a different location.
Yes, and the strategy, same strategy, right? Like the multifamily properties, and focusing on the NOI, and
Yeah.
focus on the cap rate underwriting in the worst case scenario, and closing on it and move to the next property.
Exactly. So like when we bought our property, a 33 unit in High Prairie, my partner and I, once we basically signed off on removing all the conditions, we went looking for our next property, which was our 42 unit in Vermilion. Like
Nice.
we put that Vermilion property under contract before before we even closed on High Prairie.
Yes.
So, we were focused and we knew what we wanted. And that's actually huge, to know
What do
exactly
you
what you
want?
want. Because if you don't know what you want, anything will do.
Yes, and then if
It
anything will do, then there's always that buyer's remorse, right?
yes,
Did I do the
exactly.
right thing? Does it
Exactly.
like the whole world is a real estate. Like you can buy in US, you can
Yeah,
buy outside US, you can buy in
yeah,
Canada. I feel like every investor should have their specific buy box.
yeah,
And if that property does not fit in that buy box, or the strategy does not fit in the buy box, don't look at it right now.
yeah. Absolutely. I totally agree with that. You know, like there's buildings that I don't even look at, like just because they're too small now.
Yes.
Like, okay, if somebody presents me a 15 unit building, generally I won't look at it because it's too small for
Yes.
me. I'm looking at bigger buildings now, type of thing, because I want it to move the needle,
Right.
type of thing.
And more bigger the building, less price per unit, and also the team, right? Like the one property manager taking care of the
Yeah,
whole building,
yeah,
and every property have the separate corporation, separate accounting.
yeah,
So I feel like every more the number of units, your expenses go lower.
yeah. The number of units actually makes quite a difference in your overall return, let's say. Because when we're able to raise the rent on, let's say, a 42 unit building, let's say $100, that property value increase is multiplied by 42.
Mhm.
And when you do it, let's say on an 8 unit building, well, an 8 unit building increase property value is going to be okay, but when you talk about an increase on a 42 unit building, it's huge.
Yeah, if it's
Like
10K,
it
that's like it's in, it's not only hundreds, it's like in millions, right? So
yeah, it could be millions, which is for me exciting.
yes, and then also compressing time, right? So
Absolutely.
now focus is on one property, and then it's a system. McDonald's has a system.
Yeah.
They do the same thing. And then now when we are renovating the one building, buying one type of paint and then
Yeah.
compressing time. The contractor is painting all 40 units, and you are able to refinance rather than like separate eight, smaller
Yeah.
buildings.
Exactly.
It's time is money. If you're able to, do one big thing in less amount of time and move to the next one,
Yeah.
and
Yeah.
it's game changer.
That's so true, right? Like if you can concentrate the number of units at a location, the better it is. Your numbers look better. Like if you have, let's say, 5 8 unit buildings in different locations, well, the property manager has to travel to 5 different locations, 5 roofs, 5 boilers, and things like that. So it actually is probably a little bit more expensive to own 5 8 unit buildings versus one 40 unit building type of
Yes,
thing.
yes,
Yeah.
that's great. And then you're into land development, and a lot of investors are looking to get into land development, and like the 8 units in Edmonton, like in Calgary, 8 units in Calgary. What would you suggest to them, or even like let's help our audience to pick their buy box? For example, somebody is making like average middle income, they're making 100K, like 150K family income, and they want
Yeah.
to get into their first property.
Yeah.
First thing is people think I need to buy a single family house. I want to
Right.
raise, I want to have kids. I want to buy for them.
Right.
I talk to them that focus on your how can you create mini yourself,
Right.
another building rather than buying a single family house, and then pay, then just like spend all your life to pay for it, right? So what would you recommend to somebody that who wants to get into commercial real estate, and they're working?
Yeah. So I mean, they can definitely look at, well, I guess, really identify what their goals are. Okay,
Mhm.
so like, are they looking for cash flow? Are they looking for equity growth? Are they looking for passive investing opportunities type of thing? Do they want to own a property outright? Like maybe buy a 8 unit and own that property. Do they hire a property manager or do they manage it themselves type of
Mhm.
thing? These are questions that they have to answer themselves. Okay, but I suppose buying an 8 unit property is maybe a good starting point if
Mhm.
somebody doesn't have a lot of capital type of thing and want to try to own multifamily properties.
Mhm.
Okay. Another way to invest in multifamily properties is invest with one of us, somebody
Mhm.
who's experienced in creating these multifamily deals. And a lot of times we're looking for capital type of things, and we share the returns with our investors. So, it could be cash flow, it could be equity return. So, depending on the type of deal, you might be able to get, all of your capital back in a year, 2 years, maybe 5 years. Depends on the type of deal.
Right.
Um, Really, it depends on what is the investor looking for type of
Mhm.
thing. How much effort do they want to put into it? Do they have the time, the expertise in buying a multifamily property? Do they want to create the team type of thing? Okay, find the right team members, build a relationship. Because if they don't have that experience and the time to do that, well, partner up with somebody who
Right,
does.
absolutely. Like the three things, right? Like experience, time, and the money. You don't have experience, partner up with somebody who has more experience. Now you're
Mhm.
leveraging somebody's 30, 35 years of experience. Some things go wrong and things does go wrong. Like things, markets change, rules change, and properties change, and everything changes, right? Builders change, you get into situations that are not always what you expect. So leverage somebody's experience, and then if somebody does not have the whole capital to buy the whole building, and then rather than end up buying smaller, like a pre-sale or one condo or single family house, and just like thinking that I need to stay small because I only have this much money, partner up on a bigger asset that you have some share of something really really good rather than 100% share of something not good,
Yeah,
right?
absolutely.
And
Absolutely.
then the third thing is like after experience and the money, and then also the net worth, right? You're leveraging somebody else's net worth,
Yeah.
and you're leveraging somebody else's time, like when my kids were very young, I didn't have time to think about real estate, right?
Mm.
Like we focus on smaller, and then now my kids are, I wanted to focus on commercial real estate, where I have more time and I'm leveraging other people's time, so that they, other working partners' time, that I get my time. Because you can
Absolutely.
have the money, you can build your experience, but how many years will it take? Next 30 or 40? And, it's all about think what's your buy box, think what you don't have,
Yeah.
look out and partner up with somebody who already has that.
Yeah, what holds most people back are people's mindsets.
Mhm.
And people probably don't even realize that, because I was one of them. Like when I first started, I got stuck. And around 2016, 17, I kind of got stuck where I wasn't growing. And it wasn't until I met an executive coach, which helped me work through some mindset things, some personal things. And from there, he unlocked a lot of stuff, which allowed me to grow and continue buying bigger buildings, right? If you think you can't, then you won't,
Yes, that's
right?
true. Like there's nobody can change that. Yeah,
Yeah,
it's
exactly.
you. Yeah, I
Absolutely.
think anything. I believe that anything you're doing, anything you want to do, or anything happens, it gets finished up here in the brain, and
Yeah,
then and the belief. And I believe if somebody truly believe that they can be billionaire, they can be.
yeah, yeah.
Because once the belief is there, that person is going to go out there and find out how can they,
Right,
and
exactly.
who can take them, to make the first billion.
Are they willing to do what it
Takes to do
takes
it.
to do it, right?
Yes.
Okay. When I look back at my Swan Hills building, well, when I took that building on, there were actually only 2 occupied suites out of
Mm.
24. How
Yeah.
many people would take on a building like that,
Yes, it
right?
takes a great courage and belief in yourself that, even, you put 30K, and that the thoughts that I can lose this 30K too.
Yeah,
But if you don't believe in yourself, you believed in yourself that you can do it, and you did it, and then it brings the confidence.
yeah,
And when you
exactly.
take on like in the next building, maybe there's nobody, like you can even buy unoccupied building, right?
Yeah,
Because
exactly. Yeah, you got to take a leap of faith.
yes.
Well, and believe in yourself that you can do it,
Mhm.
and just do whatever it takes to get it done.
Yes, absolutely. Thank you so much, Gary. And how can the audience reach out to you if they have any questions regarding Alberta market or anything they want to ask, because you've been in real estate for 35 years, and that is, like
Yeah,
I'm.
so yeah, they can look for me on Facebook, Gary Mah, MAH. They can give me a call. My phone number is 780-718-6926. I'd glad to, talk to other investors, other people who want to get into multifamily. So yeah,
Thank you so much, Gary. Thank you for coming. Thank you.
thank you for inviting me. It was great.